Welcome to The Explainer. Today, we're going to tackle a subject that, let's be honest, can sound a little intimidating, but it's actually the secret language behind all of business: accounting.
Just look at this number. $65 billion. That's not some company's revenue. Nope. That's roughly how much money investors lost in one of the biggest, most notorious financial frauds in history, all run by one man, Bernard Madoff. It's a number so huge, it's almost impossible to wrap your head around it.
So what on earth could a scam of that size have in common with the place you grab your coffee every morning? Well, the answer, believe it or not, is accounting. It's the system that's supposed to track every single dollar, whether that dollar is part of a global scheme or just paying for coffee beans. And as you're about to see, it's way more interesting than you think.
When that system gets manipulated, things get ugly. You've heard the names for sure. Enron, pretty much the poster child for corporate greed and corruption.
And how about WorldCom? They cooked their books to the tune of $11 billion, which led to one of the biggest bankruptcies in U.S. history at the time.
And of course, Madoff. Look, these weren't just simple mistakes or bad business decisions. These were calculated, incredibly complex schemes to break the rules of accounting, and they absolutely destroyed companies, wiped out people's life savings, and just shattered public trust.
And that's exactly why you should care about accounting. Because when the numbers lie, the fallout is huge. We're not just talking about figures on a spreadsheet, we're talking about trust, integrity, and really, the stability of the whole economy.
But let's flip that coin. Because when it's done right, accounting is honestly the single most important tool we have for understanding the health of any organization out there. It's the framework that shows you if a company is truly successful, just barely hanging on, or, about to crash and burn.
Okay, so let's get into it. The absolute best way to think about accounting isn't as a bunch of complicated math. Think of it as a language that's specifically designed to tell the financial story of a business. And once you learn a few key words and phrases, you can start to read those stories yourself.
Yeah, that's the textbook definition. But what it really means is that accounting takes all the messy, raw data, every single transaction, every paycheck, every sale, and it organizes it into a story that people can actually understand and use to make smart decisions.
Now, just like any language, accounting has rules, a kind of grammar. And its most important rule, the very core of it all, is one simple but really powerful equation. Let's build it out, step by step. It all begins with assets. Pretty simple. Assets are everything valuable a company owns. We're talking cash, inventory sitting in a warehouse, the computers, the building itself, all of it.
Okay, but where did the money to buy all that stuff come from? Well, one source is liabilities. This is all the money the company owes to other people. Think bank loans, money owed to suppliers, that kind of thing. It's debt.
And the last piece of the puzzle is owner's equity. This is the money that the owners themselves have put into the company. So, you see how it works? Everything the company owns, its assets, has to be paid for by either debt, the liabilities, or by the owner's own money, the equity. This equation has to balance. Always. It's the golden rule.
So how does that golden rule play out in the real world? Well, it's the foundation for the main reports that tell a company's financial story.
You've got three main reports, what we call financial statements, that almost every business creates. Each one gives you a different piece of the story, a different perspective, and together they give you a pretty complete picture of how the company's doing.
First up is the balance sheet. The easiest way to think about this is like a photograph. It's a snapshot. It freezes a company's finances on one particular day and shows you exactly what it owns and what it owes at that single moment.
And hey, does that look familiar? It should. The balance sheet is just our accounting equation laid out on a page. You've got assets on one side and liabilities and owner's equity on the other, and those two sides have to be equal. They have to. Well, balance. That's why it's called a balance sheet.
Okay, next up, the income statement. So if the balance sheet is a photo, a snapshot in time, then the income statement is like a video. It shows you the company's performance over a period of time, say a month, or a quarter, or a whole year. Its job is to answer one really important question. Did the company make any money? It takes all the money that came in, the revenues, and subtracts all the money that went out, the expenses, to get to that famous bottom line, either a profit or a loss. And the third key report is the statement of cash flows. And this one is so important because here's a little secret. Being profitable doesn't mean you actually have cash. This statement tracks the real dollars coming in and going out so you can see if the company is actually generating cash or burning through it. A business can die without cash even if it's profitable on paper.
All right, so now that we know what these reports are, we can do something really cool. We can start to analyze them and become like financial detectives, uncovering clues about a company's health that aren't obvious at first glance.
For instance, we can take a couple numbers from the balance sheet and calculate something called a liquidity ratio. All this does is tell us if a company has enough cash handy to pay its bills that are due right now. A high ratio is a good sign. A low ratio could be a huge red flag that they're in trouble. See? We're already reading between the lines.
Now, you might be thinking this all sounds a bit old school, right? Paper ledgers and all that. But the world of accounting is being totally shaken up by technology.
You've got software automating all the boring data entry. Cloud services mean you can see your financials in real time from anywhere. And powerful data tools are letting accountants find deeper insights. The job is really changing, from being a number cruncher who looks at the past to becoming a strategic advisor who helps a business plan its future.
So here's the big takeaway. Accounting isn't just about taxes and spreadsheets. It is a living, breathing language that helps us understand the world of business. Whether you want to start a company, invest in one, or just be a bit more informed, learning the basics of this language gives you a huge advantage. So, now that you've had a crash course, what stories will you uncover?